Let's talk to Tim Harrison. He's the head of wealth management at Linear Investments. Tim, welcome.
Good morning.
Right, let's talk about the week ahead. Obviously, Mr. Trump is in Europe this week, raising all sorts of headlines. Stock markets, in terms of the VIX and the likes, are relatively calm. What have we got to look forward to next week?
Well, hopefully Donald Trump clearing off. No, I mean, it's been an interesting week when he sat or stood in front of the NATO audience on Thursday, suggesting that they'd agreed to increase their budgets, and then President Macron of France coming out and saying we haven't actually agreed that. It's very much like he is trying to bully people and nations into getting in line with him. Which in terms of global politics is really having very little effect on the equity markets. On the back of the NATO words, the markets actually started to move higher. And that's been carried forward into Friday's session, where the FTSE seems to be holding its own around about just shy of the 77 level, 7,700, which bodes well. Most importantly, the next few days, week or so, we launch into the US earnings season. So you've got the likes of Wells Fargo, JP Morgan, etc. reporting today. Next week, the likes of Goldman Sachs, and latter part of the week, companies like Microsoft, AMD, etc. So the chip makers and the tech companies really start to come forward. So in terms of the market moves, hopefully one would suggest, or potentially one would suggest, that we're going to see less political rhetoric being the driver and more the fundamentals of companies being the driver as to whether or not the market can maintain the Dow through 25,000 and higher, or whether or not we do start to see some selling pressure step in what is historically a quiet time in terms of volumes.
Well, I've got to say, I've read in recent days that the FTSE is basically very, very cheap at the moment. Would you agree with that?
As I've said numerous times, I believe that Europe is the best value opportunity. But when I'm investing for clients, I'm not going gung-ho and just buying 100% allocations into stocks. I'm always cautious of what could be behind us. So I've been suggesting to my clients for a number of months to continue to add exposure at the right price, but not just be completely bullish and jumping in. The markets have had a good run the last couple of weeks, don't get me wrong. And again, it's a case of on what, whether it is Trump not being as forceful with NATO and potentially pulling out. That's seen as a positive for the market. So there's a lot there. I think Europe is a great value opportunity. I've said that for a number of months. But it's a case of look at the fundamentals of companies with the macro landscape pretty strong. In some respects, you can't go wrong.
On that note, Tim, thank you very much indeed.